Hello everyone, welcome back to our channel. Today we have an exciting topic to dive into.
All right, let's talk about a trading scenario that trips up so many people. We're going to take a super common, painful trading mistake and literally flip it on its head to create a powerful strategy. Seriously, we're going to show you how to turn what feels like a guaranteed loss into a high probability win. Let's dive in.
So tell me if this sounds familiar. You see a price level, right? A floor that's held up again and again. You're thinking, okay, this is it. This is the spot. Time to buy the dip. You jump in, you're feeling pretty smart, and then it all just goes completely wrong.
And this just captures that feeling perfectly. That sudden, gut-wrenching snap when the support level you trusted just vanishes. The price doesn't just dip, it nosedives, blowing right past your stop loss. But you know what the worst part is? The real salt in the wound? It's when the price rallies back up, kisses that exact same line from below, and then tanks even harder. That sting, that's what we're about to turn into our trade signal. Okay, that's it. From now on, we're flipping the script on that whole painful experience. We are done trying to catch that falling knife. Instead, we're going to learn how to anticipate that retest and turn that broken floor into our new profit ceiling. We are going to learn how to short the flip. So, first things first, we've got to understand the mechanics behind why this move even happens. It all comes down to a really cool concept in technical analysis called the change in polarity. This basically explains what's going on under the hood when a critical level breaks. So what is it exactly? Well, to put it simply, the change in polarity is just this principle where a level that used to be support, a price floor holding things up, flips and becomes the new resistance level, a new price ceiling pushing things down. It's such a fundamental idea about how markets move, and we can build an entire reliable strategy just around this one concept. But why? Why does this happen so consistently? I promise you, it's not some kind of market magic. It is all about human psychology. If you can understand the mindset of all the different traders caught in this moment, you'll see why this setup is so powerful. So let's do this. Let's put ourselves right there, at that exact moment in the market. The price has just shattered through a support level that everyone was watching. Who's in the market right now? And more importantly, what on earth are they thinking? This right here explains everything. You've got two groups of people creating a perfect storm of selling pressure. Over here, you've got the trapped bulls. These are the folks who bought at support, and now they are panicking. All they want is for the price to come back to where they bought in so they can get out without losing money. They are desperate sellers. Then you have the smart bears. They saw the weakness, they saw the breakdown, and they've been patiently waiting for the perfect spot to sell short. So what happens when the price pulls back to that old support line? Both groups pounce. They create this massive wall of selling that just forces the price back down. Okay, so the psychology makes total sense. But here's the million-dollar question. How do we know if a breakdown is the real deal? How do we avoid getting suckered into a fake out? First, you have got to change how you see these levels. Stop thinking of support and resistance as some perfect razor-thin line on your chart. It's not. It's a zone. Think of it like a war zone where buyers and sellers are in a brutal fight for control. Our job isn't to guess the winner. It's to wait and see who wins that fight decisively. And this slide shows you exactly what that decisive victory looks like. On the left, that's our signal, a big, strong, bearish candle that closes, and that's the key word, that closes well below the support zone. That is a real breakdown. The sellers have won. Now on the right, that's the trap. The price just wicks below for a moment, but then it closes back up inside the zone. That's a fake out, a bear trap, and it tells you the buyers are actually still in charge. We have to see that clear win for the sellers before we even think about placing a trade. All right, so we get the why behind the move, and we know what to look for to confirm it's real. Now for the fun part. Let's get into the how. Here is your step-by-step playbook for actually trading this setup. It really is the simple 4 steps. 1, you spot that clean breakdown candle we just talked about. 2, and listen, this is the most important part, you wait. You have to be patient. Do not chase that first big drop. Let the price come back to you, back to that old support level. 3, you confirm the rejection. You look for a bearish candle, some sign that the sellers are defending this new resistance. And 4, only after all that, once the flip is confirmed, do you enter your short trade. Look, any strategy is useless without solid risk management. So here are the rules. Your entry is on that retest, but only after you see that rejection candle. Your stop loss, it goes just above that new resistance level. This gives you a margin of safety. If the price breaks back above that line, hey, the idea was wrong, and you get out with a small, manageable loss. No big deal. And for your target, you're aiming for the next major support level down below. Because once a floor like this breaks, the price can fall for a long, long time. So let's put a bow on this. By understanding this pattern, that broken floor that used to be a source of frustration and loss, it now becomes your new, clearly defined opportunity. It's no longer a trap, it's your profit ceiling.
So let's just quickly recap the absolute essentials. Remember, this whole thing works because of simple trader psychology. You have to wait for that clean, convincing breakdown candle. Do not jump the gun. I'm telling you, the patient move, the professional move is to always wait for the retest. That's your low-risk entry. And finally, always use a stop loss just above that new resistance to protect yourself.
So there you have it. That's how you stop trying to catch a falling knife and start trading the flip. It's all about shifting your perspective from being a buyer to a seller at the perfect moment. And, well, that leaves us with one last question to chew on. If a broken support floor becomes a new resistance ceiling, what do you think happens when a resistance ceiling breaks and becomes a new floor? Think about that one.
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.